What's going on, traders? John with Tactical Trading here with our OTC Saturday video. I had a few plays I wanted to go over, one in detail, a couple briefly, but also wanted to kind of reflect on this week's market. Absolutely murderous week, rough week. We had a good rebound on Friday. I do anticipate that continuing on Monday, but then there are no guarantees going into Tuesday. The last few Tuesdays have been absolutely brutal. Probably the last 3 or 4 Tuesdays and Wednesdays have been absolutely brutal. So you're going to have to make a decision on how you want to go forward and play this market right now. One of my things is kind of cutting my positions down, not holding too many positions. I don't know if right now the bull market's over or this is just some slight correction. I'm not 100% sure. And we kind of had to play it as such because one of the main things of becoming a good trader is preserving your capital. Really doesn't, you can make all the money in the world. If you don't take profits and you don't preserve your capital, it does you no good because you end up where you just started at and you have to build all over again. So, first, I'm going to go over how I play some of these lower priced OTC plays. We're going to use one for an example, Viper. Viper was a play that I alerted on Twitter at 0.0025, so exactly at a quarter of a penny. I took a rather large position. Let's just say I took 10 million shares, okay, at 0.0025, $25,000 position. And I had the utmost confidence in this play. Really liked the play, really thought this thing had a lot of potential. So as the play was going up, I knew, when it hit the 60s, the 70s, it had a little consolidation in the 40s, where I also added to the position rather than taking profits. So we'll just say I have 15 million shares now of Viper with about a 33, 34 average. You're talking about a little higher than that, about a 35 average, and 15 million shares. So that would predicate that I had a price. Let's just say I bought in at 40. Let's just say 40. So we'll use 10 million shares at 25, and then 5 million shares at 40, which would equate to a $45,000 position with 15 million shares. When this thing hit a penny, I shaved off 1 million shares. When it dipped back down to the 80s, I shaved off 1 million shares. Then it got strong again, pulled back up, broke through a penny, and I hung on because I had confidence in this play. When it broke 2 cents and got into the 220s, I shaved 1 million shares. That's 3 million shaved. And then it got up to right around 3 cents, the 260s, where I shaved off 1 million shares, right around 250, and then shaved off another 2 million shares on the way down back to 2 cents. So that was 5 million shares shaved off. And in that shaving, I had profit, and I also had my shares paid for. By far, I mean, you're looking at 5 million shares. I still have 10 million shares on the house with profit. So then I was able to allow this play to run. So I didn't take another profit until this thing hit about 346, 350. It hit 350. I sold at 346, sold another 1 million shares. You're talking now that's another 34,000 and change as profit. Then as it shot up into the sixes, it shot up into the 4s, I shaved 1 million shares. The 5s, I shaved 1 million shares. And then in the 6s, I shaved 1 million shares. So now I have 5 million shares left. 5 million shares of Viper. When it hit the mid 7s, it started breaking down at 7. I shaved 1 million shares, so I had 4 million shares left. Then when it had its terrible run all the way down, I shaved off another 1 million shares in the 3s, so I had 2 million shares left, and I still hold 2 million shares. I know it's not a huge position, but it's a free position that I can just let ride. If this thing goes to 20, 30, 40 cents in the future, which I think it has a possibility of doing down the line with this technology and everything going along with that stock, now I have 2 million shares to ride whenever, with literally hundreds of thousands of dollars of profit, and again, free shares. And this is how you have to play these low-priced OTC stocks. When you have a lot of conviction in. Now, it may not work. So it is risky taking on a large size of shares. Usually what I'll do is as I see a stock I like that's in the usually don't buy in the trips. Very, very, very seldom do I buy in the trips. But once it breaks out of the trips, I see something with momentum, with a story, with future catalysts, I'll try to buy 10 million shares, or sometimes if it's a smaller account, you're buying 500,000 shares, whatever it may be. And if I have the utmost confidence when it pulls back, I buy more. If it starts running and it starts getting away from me, I will add a little bit if I see the momentum going. But I usually want probably a three times the position in these little low price plays than what I typically would want to hold. Is basically just locking the vault and let run. In buying the more shares, it is more risky because if it breaks against you, you got to get out. You got to cut these shares. You got to shave, if not close the whole position, if it goes terribly against you. That's why this only works when you're finding these plays with potential coming out of the trips. It's not going to work with a 3/4 of a penny stock or something like that. I mean, sometimes it might, but as the thing runs, look at. We're also going to look at INKW. This is a stock I made a big mistake on. Bought 10 million shares at 0.002225, right in that range. I ended up getting 10 million shares of INKW. And I had to just sit on a bid for a while. It went up, shot, came back, bounced, and I got lucky to get most of my fill. And this thing ended up running to 15 cents. But for some reason, I wasn't as confident in that play as I was in Viper. Probably should have been. It's a very solid play. Now, what I could have done was what I did with Viper, but instead I sold half my position when the thing broke a penny. I was just dipping off in 500,000 share lots above a penny, and the thing just ended up breaking through that, and then I ended up selling the rest at 2, leaving big money on the table as this thing rolled all the way up to 15. I was impatient with the play, but you could take a play like Life Clips, which I ended up having to cut some of my shares. I'm still confident in it, but I couldn't take the hit. I didn't want to sit through the hit when I could get the shares cheaper. I bought a couple million shares above a penny. Shot up to a penny 8, where I didn't sell anything because I thought they were going to come out with some more news and it was going to be a little more of a solid play. This thing ended up pulling back into the 90s, where I took some more shares and then dumped all the way into the 40s the next 2 days. When this thing dumped below the mid 80s, I ended up selling most of my shares. And look, I'm just going to let this thing play out. This thing dropped into the 40s, where I was able to pick up twice as many shares as I dumped off. So I dumped off, let's just say I dumped off 2 million shares in the 80s. I was able to buy 4 million shares, which I only bought 3 in the 40s. And I will be adding this play as some momentum gets to it. But I mean, I like the play, but do I want to sit through and take a beating all the way down when I could be putting in plays that are moving up, where I took that money out and secured it and was able to play a play like AABB, where I bought that under 10 cents, shot up to 17 the following day. I did sell it a little bit early, some of it a little bit early. I still have a little bit of that position, but was able to make a good profit on it. You have to look at this market. You hear this diamond hands. It doesn't apply to trading. It really doesn't, especially in a market like this. Now, if you're talking back in November, December, January, and even the beginning of February, the first week of February, that worked. Right now, we're in a little bit of a different market. So you were able to hang on to a play and just let it ride, sit through pullbacks, sometimes severe pullbacks, and it would just recover and supersede where it was prior to the pullback. Now, in this market, I don't know if that's going to happen for a little while. We are in uncertain times. We're in an uncertain market. So I definitely have to pull back on, calling plays on Twitter and calling plays on YouTube. We're going to have to find the best plays. Right now in this OTC market, it's a very uncertain time. We have the SEC suspending plays. They've suspended quite a few plays. that's disheartening. That I'm sure caused part of the rift and what caused the, was part of the reason why this market, although it did need a correction, is why it did, collapse a little bit on Wednesday and Thursday. And we really haven't seen that for quite some time. I mean, we're talking March of last year, right in the beginning of March with the election infection. This is the last time we saw something like this. So we have to proceed with caution going forward in these OTC markets. I would suggest, and again, I am not a financial advisor. I'm just some schmo sitting here telling you, what I think of the market, and that's it. But what I would suggest is if you have 20, 30 positions, you're going to have to find the ones you're most confident in and start shaving some of those positions. That's what I would do. That's what I have done. I'm slowly getting out of a lot. I mean, I was in quite a few positions. We're starting to peel back on those positions to probably get a core of well under 10, maybe 5, maybe 7 positions that I just want to hold, and the rest I day trade. Being a day trader now is a valuable asset. Learning how to read charts right now is a valuable asset. It could take you a long way on a day where your core positions are getting beat up, but you can make some money day trading the day's hot plays and doing well on. Some of these plays, they've run very strong, and I was able to get in as the action was going and cut them towards the end of the day, or cut them at where I felt I had enough profit, where I was satisfied, and save some of these days where my core positions, like my main core position, ILS, where it was actually crushed for 3 days. It was crushed. Looks like it's starting to rebound right now, and once filings drop this, I would imagine this weekend or early next week, we should see some upward trajectory in that play. I really believe that it's one of the more solid plays in the OTC. But being able to day trade other stocks is a valuable asset in this type of market. You have to be careful. Right now, there's no guarantees. I believe that Monday will be a strong day, and then I believe we're going to have a pretty bad Tuesday. And that's just only off of the last few weeks, the pattern that we've been getting from the market. And we don't control the market. The market controls itself. The market can stay, irrational much longer than we can stay solvent. So we have to be able to adapt to the market in order to go with the ebbs and the flows to preserve capital and not just ride this thing. Because think about it. So a lot of these stocks are decent stocks. I mean, I always say OTC stocks, the majority they're not that great. They're not that great. But some of them have a lot of promise. A lot of them have a lot of stuff going for them, where just a couple weeks ago or a couple months ago, these catalysts were making these stocks fly 100, 200%. They might only fly 30, 40% now, 20%. It's just a different ballgame right now. You can't look back at November through March and sit there and say, well, this is what's going to happen going into the summer. Typically, the OTC is a little bit hotter now. Usually gets hot until about the summertime. So I'm hoping we at least have another, bullish run to the summertime. But there's no guarantee of that. And I'd be foolish to sit there and say, well, I know we're going to be, great. We don't know. There's been. I mean, this has been the longest bull market of all time. It's got to come to an end sometime. And not only that, it's happened before. The dot-com bubble, the real estate bubble. So you're looking at 99 and 2000. You're looking at 08 and 09. And we could be looking right now at 21, 22. Some rough years or some rough months, whatever it may be, that we really have to adapt and, make moves that are best for us. I know on Twitter you call a stock, I like this play. I'm going to be very clear. I do not give sell orders on or my exits on Twitter. I'm not claiming to be no big shot, but I mean, I have 24,000 followers. For me to show I'm getting out of a stock could cause other people to get out of a stock. And in doing so, I'm going to hurt some people that have a different view of the stock. Maybe they're more long-term than me, or maybe they're a little more bullish than me on this particular play, and put a dent to it. I'm not going to kill a stock with 23,000 people. I mean, I'm not, that foolish to believe that. But I can cause some people to sell a stock. That's why other much larger Twitter guys, you don't see them very often calling out sell orders. They'll give you an idea. What I'm doing is giving you an idea. I like this particular play. I like it for a 30 to 90 day swing. I like it for a 2-week swing, whatever it may be. I like it, for in that. But always at the end of that time frame, I'm always reevaluating the play. Or if the thesis changes or something changes, I get out of the play. I'm not one to sit through beatdowns. I'm not one to do it. And I don't think it's a smart move to sit through major pullbacks when you can cut. If you see if you could read the tea leaves and you see what's happening, you could cut and buy back at a much lower, a lot lower cost basis. So, that's kind of all I really got for you. I will get into a couple plays, but definitely thought, in this time we have to talk about this. We have to make sure we're making the right moves for us. I mean, some of us are day traders and that's it. Burning through a bunch of capital, which you live off of, that's a dangerous thing to do. Dangerous. Because like I said before, the market can definitely the market can remain irrational much longer than you can stay solvent. This thing can go, maybe have a pop, maybe it crashes on them. I don't know. That's just my belief that we'll have a strong Monday because that's what the pattern has shown over the last few weeks. So we don't know the future. Many can tell you, this and that. I mean, I said on Thursday, I dip bought a few stocks. I dip bought AABB under 10 cents. I bought ILIS at 6.6, SWRM in the 180s, and World Series of Golf, I believe, in the 260s or 270s. Those are the 4 that I dip bought that day. And I said, I think these could be a steal going into tomorrow, which they all were. They all worked out tremendously, all of them, all 4 of them. But I had comments saying, this market is not turning around. There's no way it turned. It's a Friday. This ain't turning around. And what happened? The market turned around. Now, I'm not saying I predicted the market turn around. I had a feeling it would have a bounce back day after 2 bloody red days. I had a feeling it would bounce back a little bit. But there's people that there's no way. You don't know. I was making a projection, but I wasn't saying definitely. There was always an if. If this happens, it's going to look really good. If it went the other way, it would have looked really bad. I just happened to be right on that instance. I've been wrong before, and I'll be wrong again. Yeah, I mean, some people think they just definitely know. No, the market does what it feels like doing. It's plain and simple. There's bigger levers and pulleys that are making this market go than just us little retail traders. We're just a little piece of the puzzle. I know we've grown exponentially over the last few years, but we're still just a small piece of the schematics of how this market and how this world economy, kind of works, and that's just the way it is. So all I'm really telling you is just be safe. Use discretion, always be safe, and just use your head when you're trading. We can't afford to be making huge mistakes and blowing up the majority of our capital. It just doesn't make any sense. Please forgive me, I'm not playing with my phone. I'm actually just pulling up a couple of charts here so I can talk about a couple stocks. In fact, the first stock we're going to mention on OTC Saturday is SWRM, SWRM. This play, I'm not going to get too deep into it. I may make a video of the stock, during the week, kind of just do individual stocks and explain them. And we'll maybe do a little bit of a change up. But SWRM closed at 0.031, so a shade over 3 cents. It was up 22% on Friday. Had a really nice rebound from a bounce off the low 160s. what I really like about this company is that they have a video conferencing software, and I really like that. I think obviously that's the wave of the future. People are going to be communicating and doing business over over electronics and things of that nature, and SWRM does provide something to do that, video conferencing. I think it ran up to almost 7 cents. My computer just cut off. I hope it was still recording, and I'm an old man. I got to get used to using these computers and cameras and different things like that. But yeah, SWRM closed up. Actually had a great day. Bounced off the 0.0162 level, which was an absolute steal. I got some in the 80s, in the 180s. I think this company, it ran up to 0.0639 not too long ago. In fact, that was just on last Thursday it did. Can it run back up there? I think so. If the market turns in a way, where we're a little more bullish, I think this thing can break 6-7 cents easy. Depending on the market. But I do think this is something that I'm holding for the next 30 to 90 days. Let this thing play out. I really like this play, and that's SWRM, SWRM. Next one we're going to be talking about is kind of a wild card play. This is let's see here. I can't even type on my phone now. And this is Telco Cuba Inc. QBAN. These guys closed at 0.0023 on Friday. They were up 21%. Pretty good. This is a little bit of a riskier company, but obviously they're pink current. They have a decent share structure. It's not absolutely horrible. I believe it's under 4 billion. So there's some plays that have run that have 6, 7, 10 billion shares. I keep going back to HCMC. Let me look at that, how that thing ran. But this company's got a lot of stuff going for it. This is a sleeper play that I grabbed. Actually picked up shares on Friday. I just saw the pullback. This thing ran to 0.0045. Looked like it had momentum to keep going, and then Wednesday and Thursday happened and just crushed this thing down to 0.0013. I thought that was just way too cheap for this stock. I think this thing has potential. So I'd like you to do your homework on QBAN and SWRM, SWRM, and QBAN. Do your research on these guys. I really like both of these companies. I think they both have at least 100% potential from where they're at right now. So companies I really like. Last but not least, probably my favorite of the three is Santo Mining, SANP. I know this stock already had a huge run, got killed. It did have its pullback, but then as it was pulling back, ran into the disaster that was Wednesday and Thursday of this week, and had a really nice Friday. I think, in fact, it was up 116% on Friday, closed at just a penny 04, so 0.0104. Again, up 116%. Beautiful buying opportunity early in the day Friday, late day Thursday on this thing, because they have a lot going for it. Now, they are not pink current right now, but they will be going pink current in the very near future. They're talking over the next 10 days. I expect it to be either next week or the week after. They will be pink current. Pulling back from the highs of 0.0348, they're 250% below where their high was. And they had momentum going into that. And a couple of very strong days where this guy ran hard. And it ran really hard, over 100% yesterday on Friday. So I think this run may continue with the catalyst that they have going forward. Now, again, they're getting current in the next week or so. They're a Cardano. It's actually a public blockchain. It's like a cryptocurrency that, in fact, CoinCora called Cardano Crypto Valley's second biggest unicorn, which means it has a $1 billion valuation. And so Cardano's hot. I'm not a big Bitcoin and cryptocurrency guy. I don't invest in it right now. I have some Bitcoin that I bought years ago, but not much. And just really never dug in and learned. Maybe I should. probably should get a little more wiser on the Bitcoin aspect of it, because that seems to be a good investment going forward. But being that SANP is a Cardano miner, being that CoinCora calls Cardano Crypto Valley's second largest unicorn, again, $1 billion valuation. They also have they partnered with DNAX or DNAX or DNA Labs for this software called DNA Tags. Don't know the schematics of it all, but I understand this is like a anti-counterfeiting software. Santo Mining holds 30% of that, and of the intellectual property of DNA Tags. And this, what I'm understanding, is this software will get them into the cannabis, pharmaceutical, health and beauty industries, and more, also with different blockchains and cryptocurrencies. They're also in telehealth and telemedicine through their subsidiary NAFS, which is a publicly traded OTC with Voicare or voicare.com. So this company's got a lot of things going for it. The share structure is okay. I mean, I wouldn't say it's got a great share structure. I wouldn't say it's got a horrible share structure. But this company's got a lot. First off, it's in the crypto sector, or the blockchain and crypto sector, which I think will continue to be one of the hotter sectors going forward. This may have like an EV type run over the next 3-4 months, where the stocks just keep getting refound and running back up. Definitely think Santo Mining's a heck of a play. I bought it right out of the trips last time, but sold way too early on that one. I just didn't do my research. There's so many stocks going around. I never really zoned in on Santo Mining. Heard a lot of people talking about it. I was like, it's I'm going to play it, but I didn't really dig into it, and that's why, hence the short swing trade on it. Maybe a couple weeks. And never took a really large position. But now, after I saw it running into the 2s, into the 3s, I started digging into the company more. And it was like, man, well, I'm not going to chase it up here in the 3.5s. I had one day trade on it, in fact, where I bought it in the mid 2s, sold in the low 3s. Very nice day trade. But because I didn't dig in at the time, and I didn't want to hold from way up there, I figured we would have a pullback. I never thought we'd have a pullback, down to a half a penny. So that was a gift. And I took advantage of it because I know this company is solid. They've got a lot of catalysts coming forward. So definitely like Santo Mining, SANP. Probably my favorite of the 3, right there with SWRM. Love SWRM as well, too. Really think that's a solid company. QBAN is more of a lotto play for me. I do like what they have going. I think that it's going to go way higher than where it's at now. But as far as the 3, obviously, Santo Mining and SWRM are my 2 favorites. So that's all I got for you today. I just want to, put some emphasis on the fact that I want you guys to be extremely careful going forward in this market. You have to play smart. You have to cut your losses. Always put a mental stop loss on a play. Let's just use an example. XYZ we're buying at 0.3 of a penny at 0.003. I'm buying 2 million shares, so it's going to cost me $6,000. I only want to lose max $750 on this, which still might be too much. I max want to lose $500 on this play. I like it, but it's not one of my favorites. So I'm going to take a flyer on it. I only want to lose about 500. So you set your stop loss accordingly. You have to set a mental stop loss. It's never good to put stop losses orders in the market unless you can't follow your own rules. Following the rules is one of the most important things. You have to write rules out when you trade. It's senseless to trade without rules, without a strategy. You have to have an outlined, structure to a business. This is a business. If you're not trading as a business, you're just doing it as a side thing, then this doesn't apply to you. But if you want to be a full-time trader, you must make rules. You must abide by those rules, because rules mean nothing if they are not followed. So you have to set a rule structure. How much am I willing, what percentage-wise am I willing to lose on a play? What percentage am I willing in my portfolio am I willing to put into a play? You have to make a tiered criteria of A plays, B plays, C plays, or however you 1, 2, 3, or 3-star, however you want to categorize it. And you have to kind of make a checklist of, does this stock check off all my criteria of being a good play? And if it checks out 7 of the 10, it's a A play. If it checks out 5 of the 10, maybe a B play. If it or 6 of the 10. If it checks out 5 or 4, then maybe it's a C play. If it checks out none of them, then you don't play it. Or it checks out 2 or 3, you don't play it. Something of that nature. I'm not telling you what to do, but there's a lot of different things you can do in order to make yourself a successful trader. But you have to run it like a business. You have to know that every day's P&L means something, or every week's P&L. Usually I do it by the week. Because you have up days and down days, so you kind of break it into weeks and months. But if you're gonna live off your trading profits and you're gonna build a successful trading business, it only makes sense that you have to have rules and you have to abide by those rules. It's almost like being with any company. You get a job with a company and they have the company rules. Well, if you break those rules, what happens? You get fired. See, this is the dangerous thing about being a day trader. Is, what, are you gonna fire yourself? You're working for yourself. So there's really no accountability. There's really no accountability to it. If you want to keep trading, you're going to keep trading. The only lesson you're going to learn in the trading business is the stark reality is that the market doesn't always go up and you're going to get hit. And knowing how to handle that, knowing how to maneuver around those periods. Otherwise, you won't last. You won't last in this business. I hate to be the bearer of bad news, but it's just the way it is, guys. I'm going to try to do the best I can as far as, coming out with some more of these. I'm working on editing and stuff. I got my kids helping me with that because I'm not the greatest computer guy there is right now. But I'm getting better. And again, also, one last thing with the subscription service. I jumped the gun on it. I have it ready. It's ready to go. But I'm moving, and my closing was moved up. So I'm actually closing on Monday. So this upcoming Monday, 2 days from now, we're closing. I have carpet guys coming in, painters coming in, plumber coming in. So I have all that happening at once. Appliances getting put in. So we're putting floors and painting, fixing things up. So that may take a week or two. Shouldn't take too long because I got everybody lined up. But once that's in, and once I get settled in my office and then we're going to roll that out. So it shouldn't be more than a week or two, maybe let's just not get maybe 2 weeks or 2.5 weeks or so. We can get this thing rolled out. I didn't want to start it. I was going to start it this week or last week, and decided, but since the closing was moved up, there was no point in starting it and then having to pause it, for 5-10 days. So I'll just start it fresh. And I will have a video on all how to sign up, everything like that. We'll have everything to you over the next week or two. And that's really all I got, guys. Any comments or questions, put them in the comment section below. Please like, please share, please subscribe. And as always, traders,